Hey everyone, this is Isra Naur, and welcome to the second episode of the series Stock Market Made Easy. Ever wondered what people mean when they throw around terms like shares, dividends, IPOs, or indices? Don't worry, we are breaking it all down today, step by step. And if you missed our previous video explaining what the stock market is and how it works, don't forget to check it out later. Link in the description. Let's start with the basics. Shares. Imagine you own a coffee shop and you want to expand it. To raise money, you sell tiny pieces of ownership in your business to others. These pieces are called shares. When you buy a share of a company, you own a small part of it. And here's the best part, when the company makes profits, it might share some of that profit with you. That's called a dividend. Now, what are dividends? Dividends are like a thank you note with money. If a company earns profits, it may decide to share a part of those profits with its shareholders. Not all companies pay dividends, some prefer to reinvest their profits to grow even bigger. But when dividends do come, they're like a little paycheck for owning a share of that company. Now let's talk about IPOs, or initial public offerings. Imagine your coffee shop is doing so well that you decide to make it a public company, allowing everyday people to buy shares. The first time you offer these shares to the public is called an IPO. It's how big names like Google, Tesla, and Zomato started trading on the stock market. Ever heard of terms like large cap or small cap companies? That's where market capitalization comes in. Market capitalization, or market cap, is how we measure the size of a company in the stock market. It's calculated using this simple formula, which is market cap equal to total number of shares multiplied by current share price. Imagine a company has 1 crore shares and each share is worth 100 rupees. So market cap equal to 1 crore into 100 rupees, which is equal to 100 crore rupees. So the company's market value is rupees 100 crore. Based on market cap, companies are categorized into 3 groups: large cap, mid cap, and small cap. Large cap companies, these are big players in the stock market. They are stable, well established, and often the industry leaders. And examples are Reliance Industries, TCS, and Infosys. In India, companies with a market cap of 20,000 crore or more fall under this category. They are like the elephants of the market, less risky but grow slower compared to the smaller companies. Mid-cap companies, these are medium-sized companies that grow faster than large-cap companies but slightly riskier. And in India, companies with a market cap between 5,000 crore and 20,000 crore are mid-cap. Think of them as tigers of the market, agile and capable of surprising growth. Small cap companies. These are the smallest companies on the stock market, often startups or businesses with high growth potential. In India, companies with a market cap below 5,000 crore are small cap companies. They're like rabbits, fast moving but riskier. Market cap helps investors decide which companies suit their goals and risk appetite. You can easily check a company's market cap on stock trading platforms or websites like NSE, BSE, or Money Control. Next, let's talk about indices like the Nifty or Sensex. Think of them as report cards for the stock market. They track the performance of a group of top companies. For example, the Nifty 50 shows how the top 50 companies on the NSE are doing, while the Sensex tracks the top 30 on the BSE. NSE and BSE are basically stock exchanges of India, which I've explained in our first video. Do check it out, link in the description. So if Nifty and Sensex go up, it means most big companies are doing well. If they go down, the market might be having a tough day. Now let's talk about bull markets and bear markets. If the market is going up, we call it bull market because bulls attack by thrusting their horns upwards. If the market is going down, it's a bear market because bears swipe their paws downwards. These are the major terms to keep in mind while understanding the stock market. Remember, the stock market isn't just for experts, it's for anyone willing to learn. Don't forget to like, subscribe, and comment with your favorite term from today.